Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into Legence's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Legence's performance, especially as this is their inaugural report as a public company.
Absolutely. And what a debut it is. Let's get started. Revenue and profitability overview. Let's start with the top line. Legence reported a record revenue of $708 million for Q3 2025, marking a 26% increase from the previous year. John, what are your thoughts on this impressive growth?
It's indeed impressive. The growth is primarily driven by strong demand across their key segments, particularly in installation and maintenance, which saw a 35.1% increase. This segment alone contributed significantly to the overall revenue boost.
And what about profitability? Despite the revenue growth, Legence reported a net loss of $0.6 million. How does this align with their adjusted EBITDA performance?
While they reported a net loss, their adjusted EBITDA increased by 39% to $88.8 million. This indicates strong operational performance and cost management, even though the net loss reflects some non-operational expenses and strategic investments.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did the engineering and consulting and installation and maintenance segments fare this quarter?
The engineering and consulting segment saw a 9.5% increase in revenue, driven by demand from government and healthcare clients. Meanwhile, the installation and maintenance segment experienced a robust 35.1% growth, largely due to increased demand from data centers and healthcare sectors.
That's quite a performance. I also noticed their backlog and awarded contracts reached $3.1 billion. What does this tell us about their future prospects?
This backlog, along with a strong book-to-bill ratio of 1.5x, suggests a healthy pipeline of future projects. It reflects strong market demand and Legence's ability to secure new contracts, which bodes well for sustained growth.
Acquisitions and financial strategy. Legence has been active on the acquisition front, notably with the agreement to acquire Bowers for $475 million. How does this fit into their overall strategy?
The acquisition of Bowers is strategic, expanding their footprint in the Northern Virginia, D.C. metro area. It aligns with their goal to enhance service offerings and cross-selling opportunities, particularly in mechanical contracting.
And financially, how is Legence managing its debt and capital structure post-IPO?
They've effectively used IPO proceeds to reduce net debt to $650 million. Additionally, they've amended their credit facilities to extend maturities and reduce interest rates, which should improve their financial flexibility and reduce interest expenses.
Guidance and future outlook. Looking ahead, Legence has provided guidance for Q4 2025 and full year 2026. What are the key highlights here?
For Q4 2025, they're expecting revenues between $600 million and $630 million, with adjusted EBITDA ranging from $60 million to $65 million. For 2026, they project revenues of $2.65 billion to $2.85 billion and adjusted EBITDA of $295 million to $315 million. This guidance reflects confidence in their growth trajectory and market position.
It seems they're optimistic about the future. What factors are driving this positive outlook?
Their comprehensive service capabilities, strong market demand, and strategic acquisitions are key drivers. Additionally, their focus on reducing leverage and enhancing operational efficiencies supports a robust outlook.